Good morning, everyone. Welcome back to another episode of the Broker Breakdown. Super excited. We have another returning guest today. One of my favorite guests to always talk about. Our conversations are always great on and off the podcast. So welcome back, David Holton. David,
Hey,
how are you?
fantastic, and thanks, James, for having me back. It's been fantastic, and happy to do this again with you. I'm David Holton. I'm a full-time mortgage agent with Mortgage Financial in Hamilton. License number is 10421, and I look forward to discussing mortgage stuff with you again.
Yeah, I think it was a year ago, right? We did this?
Yeah, maybe in 13 months, but yeah, time flies.
I know. I can't believe it. Like I said, we're going. This April will be 2 years since the podcast has been going. So time flies. I found that this summer was kind of like it didn't fly as it normally does, but I find that the fall has really flown by. Like October, was just boom, gone. And even November, I can't believe it's already November 17th.
I hear you. Just time's flying, and before you know it's going to be the new year.
Yep, and unfortunately, the snow is going to start coming, and then that's when I'm going to get upset.
No golfing. Yep.
I hate snow. I hate winter. It's just not. It's not something I enjoy. I wish I could go down south and golf and just be in a warmer climate. I'm just not a cold person, unfortunately.
You and me both.
Yeah. Yeah, so obviously, since we spoke last, there's been a lot of changes to the real estate market, mortgage market. Even from the insurance side of things on how we insure certain mortgages. And I want to kind of get your take on things, like how things have been since we last spoke. Obviously, like I said, we've been 12, 13 months, whatever it's been since you've been on. Obviously, there's been a lot of change, a lot of talk, mortgages, real estate, obviously being one of those big things that everyone keeps talking about. But kind of want to see from your point of view what you're seeing on your end.
Yeah, no, absolutely. It definitely has been a fast year, and it's definitely been like a roller coaster ride. Some days it's like riding it blindfolded, so you never know what's the next curveball coming at you. But yeah, it's interesting. Things are slower. People are concerned given the cost of borrowing to be appreciated. But it's all about education and talking with people, and talking about the cost of borrowing, not so much the rates, but what it costs to borrow. Can you handle the payment? Does it fit your budget, your lifestyle, your cash flow, and all that kind of stuff? And having those conversations with clients who are looking to, do something with their mortgage or acquire a mortgage.
I heard a great saying last week, and I've been using it a lot throughout this week, and a lot of people I've been talking to, but the saying was marry the home, date the rate. And I was like, oh, that's actually that's really interesting to think about. And I just wanted to kind of get your take on that.
Hey, you kind of hit the nail on the head. I've heard that too before, but it is so true. When you buy a house or buy property, generally speaking, you keep it for a period of time, 5+ years, 10 years, or even longer. So we both know, the higher rates are in, it's not going to be like this forever. But at some point, when rates come down, that's going to reignite the frenzy that we've had in the past, and it's going to drive property prices back up. So my theory is, stuff is quieter, prices have come down considerably. Take advantage of this market. If you can afford the mortgage payment today based on the current landscape, go for it, knowing that, you're saving, tons of money in the purchase price of the home, plus, the necessary down payments and the closing costs. For example, if you compare, buying a home in April of 2022 versus, last month being October, in the city of Hamilton and all areas that make up the city of Hamilton, right off the bat, there's a savings of, $29,000 on average on the acquired down payment, meaning you're having to fork over $29,000 less to buy that property. That takes a lot of time for people to save that money. So people need to realize, yes, rates are up, but housing prices are come down considerably. In terms of financing home from April of last year versus October of this year, your monthly mortgage payments up by about $219 per month, which I know is still, a good chunk of change, but understand that, if you can afford this payment today, when rates come back down, you're going to be, laughing per se, because, that payment is going to be even lower. So it's just something to be mindful of when you're looking at real estate and trying to look at the bigger picture and trying to block out all the negativity when rates are up. Yeah, they are, but let's look at the bigger picture and let's convert this into dollars and cents of what it means for you.
Would you say a lot of this negativity is obviously coming from mainstream media, like people just really seeing things on the news, newspaper, radio, that kind of stuff, and they're just kind of taking it at a full truth instead of actually speaking with an expert like yourself?
The media's, it's a love-hate relationship. Their job is to, sell ad space and get attention. So they do that by, posting negativity to get consumers to eat it because we all crave the negative news. It's what draws us in. So it's really, taking that and talking dollars and cents with clients and, people need a place to live. So if they have a stable job and stable everything, and you got the down payment, and you're planning to live in the house for a period of time, then let's explore that and see what it means for you.
Do you think during this time, like, is there really I know before, like, people were kind of pushing either variable or fixed. Is there, like, something that you kind of almost strive towards for clients right now because of, like, how unstable things have been over the last few years? Like, is there something that you're pushing more for clients that makes more sense for people because we are possibly going to see rate decreases coming up soon? Or is it still like it's going to be situational based on what every client's life really looks like, and then you kind of place them in what makes more sense for them?
Yeah, there's not a cookie cutter approach. It's like, what makes sense for the client based on their short term and long term goals, and then having that discussion versus fixed versus variable. If they're in variable, should, rates continue to go up? I don't think they're going to, but if they can continue to go up, how does this impact your cash flow? And what your goals are. If you're planning on starting a family, for example, and one person's going to mat leave, having a payment that's fluctuating may not make a lot of financial sense where they want that stability during that period of time. So it's really trying to truly understand what their clients' short-term, long-term goals are and how they can handle payments, and trying to understand that to the best of my abilities, and then making sure we find a product that suits their situation.
Have you been seeing a lot of people recently as well? Because I've been kind of seeing on our side is that we're seeing a lot of people that bought houses in the last like 3 years, and they're like selling them now. But like to me, like I'm looking at it and I'm like, well, if you bought at the peak and you're selling it now in a dip, like you're definitely losing money on it. So like, have you been seeing that too, where people are like trying to like get out of their mortgages, sell off their property, but they're like losing on it almost?
I haven't heard any stories from my clients, but yeah, but life happens. So whether that's someone needs to relocate for job purposes because they're moving to a different city or province, or maybe it's the house isn't suiting their needs. Maybe there's a relationship breakdown. So homes are sold for a variety of reasons. And yes, I guess there is a potential if it was acquired in the last 2 and a bit years, then yeah, there is, I guess, the potential for them to possibly lose money on that house.
Yeah, which is, again, like if you're looking at the last 3 years, like we were at a peak at that time, right? And we, like, again, like you said, we have kind of seen prices start to come down a little bit, which is good for obviously people wanting to buy. But again, like if I'm seeing people trying to go sell right now, it's like I'm thinking, it's like, well, if you bought in the last 3 years and you're trying to sell now, like I would have to believe that you're taking a loss on that if you're selling this house in today's market.
I would think so. It's hard to generalize across the board, but I think there's a strong possibility that definitely a good chunk of those owners could be in a situation where, they are potentially going to be coming out not further ahead. Yeah, it's a definite real possibility.
So what's the one big thing that you're telling your clients right now? Like, are you really trying to push them and say, hey, look, there's a lot of opportunity here? Or are you on the opposite side? Because again, I have people that talk to me all the time, and there's some people are like, oh, like wait a little bit more. But then I have other people that are like, you know what, there's a lot of opportunity right now. It's like, if you can, like, get into the market.
Yeah, you can never time the market. It's like trying to time the stock market. It's basically impossible. No one has a crystal ball, but when you go back to the numbers and how the pricing come down, how there's less down payment required, there's savings on closing costs. Like, these are all positives. So if your situation, you know, makes sense to buy a house, you got a stable job, you got the required down payment, you see you're going to be in the house for a period of time, go for it, pull the trigger. Like I said, you're marry the house but not marry the rate. So, if those all kind of, make sense and line up, then go for it.
I don't know if you have this stat, but again, like we were kind of saying, you were on about 12 months ago. Would you kind of know, like, let's just say from a percentage wise, like what rates on homes have gone down in that last 12 to 13 months since you've been on, like roughly?
I honestly haven't looked at the data points that closely. I can say back in the spring of this year, fixed rates have increased in comparison to today. They actually pulled back a smidge in the last 2 weeks. Back in the spring, we were doing CMHC and insured mortgages in about 4.5%, roughly, give or take, and then a conventional, so meaning 20% down. You're into the low fives. So today, CMHC insured mortgage, you're about 5.7, roughly, give or take, and the CMHC and a conventional mortgage, you're probably sitting at about 6.3, 6.4, and around there. But rates are kind of like the price of gas; they can change literally every day. So I don't quote rates; I talk dollars and cents. And can you afford this payment? Does that make sense for you?
Yep. No, that makes sense. Again, I'm on social media all the time, and I've been seeing a lot where they're saying that again, this might be completely wrong, but the Americans, I guess, are seeing a lot lower inflation rate than they thought they were going to see. And a lot of Canadians are now saying, well, that's really going to help the Bank of Canada with their next rate decision. Like, does that hold any merit, or are we just really just hoping that our neighbors to the south are going to possibly, their economy is going to obviously possibly help our economy moving into what they're going to decide, I guess. Is it in December that they're going to decide again? Is that what they're saying? December 6th or something?
Yeah, that's our next meeting here in Canada. And the stuff I pay attention to, which will maybe influence their meetings, is job numbers. Are we adding jobs or losing jobs? And what's the inflation doing? So, if inflation's going up, then, more likely they could increase it. If it's coming down, then, less likely for them to increase it. And the same with jobs. If the economy is growing, that's putting upward pressure, which would increase the likelihood of the increasing rates. But if job numbers or if we're losing jobs, or that situation, then less likely they'll to increase rates. So those are the kind of key data points in my mind that I follow to see what's going to happen for the next meeting.
Yeah, it's interesting because, again, like, from like an economic standpoint, I always hear they're like, from a technical standpoint, like we should be in a recession, but it's funny because we haven't seen job loss as what a recession would really bring in, right? So it's just interesting that we're in such a weird time where our economy is still unstable, but like people are still like developing and creating new jobs like we've never seen before. So it's kind of an interesting, like almost like a polar opposite of what should be happening. Like our economy is not very good, but we're still creating jobs, where like normally it would be that our economy is not good, we're losing jobs, right?
Exactly.
But I guess moving forward into 2024, like what are you really predicting? Because again, like there's some people out that are like, oh, we're not really going to see a whole lot of change, at least for the first half of 2024. A lot of people are also saying, you know what, based off what's going on in the States right now, like we're possibly going to see even possibly a reduction in December. What's kind of your take on that? Because like personally, like again, I'm not the expert, but just from an insurance standpoint, like I've been telling a lot of my clients, everyone's rates are going up. It's not obviously what people want to hear, but it's the reality. And I've been very on point when I said a few years ago, I said you're going to see rate increases probably for the next 3 to 5 years. And we've already seen that over the last 2 years. So directly with insurance, like, do you think that mortgage rates are going to go up? Do you think they're going to go down? Do you think they're going to stay stabilized for a portion of 2024 and then kind of at the end of 2024 start stabilizing? What do you kind of see the future for mortgage rates?
Yeah, great question. So fixed rates follow the bond market, and those have been doing very, very well over the last while. They pulled back a hair. So where those are going, to be honest, I'm not too sure. In terms of where prime's going, which impacts, variable rate mortgages, I think by November of next year, I could see things down maybe quarter point, half point potentially. When they start those decreases, I've heard everything from the spring of next year to the summer to the fall. So let's wait and see what happens, right?
Yeah. I just I hear some people that are so optimistic about things going down like to like the mid fours by next year, and it's just like I just don't see that happening.
I don't see it happening unless something drastic happens that we can't foresee. It'd be no different than, a few years ago when COVID started. No one saw that coming, and then look what happened afterwards, right? So unless something drastic happens that isn't foreseen right now, it's hard to say.
Yeah, 100%. But again, if you see these home prices come, or if you see the rates come down on mortgages, like you got to expect rates on homes are going to go up.
Don't know. Pardon me. Don't know, to be honest. It's yeah, it's wait and see. I don't have a crystal ball. It's like, here's what things are today. If it makes financial sense, then go for it. If you feel that, things are going to come down, then maybe like a variable rate mortgage could be for you, so you can, ride that way down. So it's, yeah, anyone's guess.
Another thing I wanted to bring up too, because we see it a lot on the insurance side of things, is these private mortgages, where a lot of people are kind of getting these private mortgage side. And I always kind of, I wouldn't say caution clients, but obviously educate them a little bit more that private mortgages, a lot of companies have a lot of rules in regards to them. So I always just say, like, obviously be careful when you're going into one, because not every insurance company, one, will accept those. But two, like if they do accept them, there's a lot of rules behind them. So are you seeing a lot of your clients ask more about them now? Because I definitely have seen a big influx in people asking about them and even taking them in the last 12 months.
Yeah, they've become very, very popular in the broker space, just given the environment we're in, with qualification being more challenging, people needing assistance. So yes, they become much more prevalent, and yeah, a lot more transactions for private financing in the last few months. Absolutely.
Do you also find too? I had a conversation at the event last night, and it was funny that everyone I basically talked to basically said, like, when you're closing a home, don't you always find insurance is like the last thing clients always think about? Like it's never in like the middle of the conversation or at the beginning of the conversation. Always finds that a lot of clients, I'm not going to say all clients, but a large majority of clients kind of leave the insurance point like almost like to the last section. And then it's like, oh, my home closes tomorrow. Like, we need to get insurance on this. And like I said, then like the mortgage and like the age of home, like everything about the home can obviously uphold the insurance process, right? So do you see that as well on your end? Obviously, if you're closing mortgages, like maybe you don't deal with it directly, but the lawyer can't close things for you guys because insurance always becomes like the last thing clients think about.
100%. Not to jinx it, it hasn't happened to me yet, because part of my process is saying, hey, you guys, you need house insurance. So I highly suggest, you get it. If you're looking for a recommendation, I'll send them to you. But yes, highly suggest that people get it dealt with, so it's one less hurdle that they have to, check off their list before closing day. So just get it out of the way and, you know, move on to the next thing on your list before you close in the house.
I brought that up yesterday too, and it was funny because I had the conversation with like a lawyer, all the real estate guys yesterday, and it was funny because I was like, it's so funny that like our markets and industries so intertwine, but we don't communicate between industries all that often. Like, yes, I work with you, I work with a lawyer, I work with a real estate agent, but like on a general front, like we're not all talking to each other and like getting things done, right? It's almost like, okay, like now I'm going to pass it off to this person and this person's going to do this. But like, I don't like once it's off my desk, like I'm just not like, it's not my problem anymore. Right. So I find like with how intertwined our industries are, I would almost like expect like, especially because like our governing body and your governing body is the same governing body, but we don't like ever like cross paths of like, oh, like we like they're not like promoting like event nights or like webinars or like where people can like chat more and be like, you know what, like if we just kind of communicated when clients are like part of this process, like things would get done so much quicker, smoother, accurate. But like I just find that no one like talks. It's just like, oh, it's not my like part of the process anymore, so I'm just gonna pass it off to whoever is gonna take a hold of it, and like it's not gonna be my problem anymore.
Yeah, it's like we're almost stuck in like our own silo, man. It's like, oh, not in my backyard, not my problem, someone else's thing. Yeah, we definitely need to collaborate more, I think, as an industry whole, to better serve our clients and how we can support each other by referring them to trusted sources too in our industries.
Yeah, I don't find it happens too much. Like I find and again, I don't want to throw anyone under the bus, but I find it's a lot like when I deal with lawyers, like I find that they're like the ones that like don't like they're almost like shocked that I'm like involved in like the process and like chatting with them, because they're like, oh, like I already gave this off to like the client should be reaching out to you. And I find though a lot it's dealerships. Like how many dealerships I call or email and they're like, I already gave the bill of sale to your client. Like you can reach out to them and do it with them. It's like, that's not a great service at all. Like you're just basically passing it off to the client to do it all like for themselves. Like why don't you help them? Like they're buying a new car, they're buying a home. Like this is a big part of their life. Like why don't you like, again, you don't need to hold their hand through it, but at least guide them a little bit to like help them. And it's so funny that like some industries, or I wouldn't even say industries, but some like dealerships and businesses, like that's the way they conduct their business, is like they're so hands off. Like once their portion of like the deal is done, they're basically just like, I don't have anything else to do with this.
Yeah, it comes down to service, and that's what makes you stand out in the industry. So if it's a bad experience for the client, then they're not going to be recommending that dealership or individual or whoever, if it's been a bad experience. So it's comes down to customer service and the post-sale service.
Are you finding right now customer service is really hard to win on? Because I feel like we're finding that right now with like everyone kind of trying to save every little penny, that I almost find customer service, not only is it in a really bad spot right now, but a lot of clients aren't holding it as valuable as they used to.
Maybe a little bit. It's coming down to education through product knowledge, and responding to emails, inquiries, and a little bit. If someone's solely focused on price or rate for that matter, maybe are not the best match for you, because there's so much more to pay attention to than just rates, more about the features and benefits of the mortgage. It'd be no different than insurance. If you get the cheapest insurance rate, the service and, all that stuff in behind may be very lousy should you ever need that. So people need to be aware that, price and service are very much tied together.
Yeah, and like I say all the time, you kind of get what you pay for, right? Like if you're going out and you want to get a new phone, you're probably looking at an iPhone or an Android. You're not going for a flip phone, right? So it's all, you get what you pay for at the end of the day. If you're gonna cheap out and get the cheapest option, I always caution people, because at the end of the day, like especially with more regulated rates, like auto insurance, like rates should be pretty similar. If I'm quoting a piece of business from company A, B, and C, and another broker offers the same quotes from A, B, and C, they should be exactly the same. But the problem is we find a lot that where they're not the same, and then clients go, well, I got a quote from another broker with the same company, and it's like $300 cheaper. And it's like, well, like, what questions did they ask? What are you actually disclosing to them? Everything, right? Like we're getting to like insurance right now is in a very weird spot, because a lot of companies, again, there are the loss ratios that we're seeing from insurance companies are beyond poor. Like there's companies out there that are 120% basically loss revenue on claims and policies, right? So basically every dollar that they're bringing in, they're losing 20 cents. So
wow.
That's not sustainable moving forward. And again, how do you make that sustainable? Unfortunately, you raise rates, right? And every company is going through it, regardless if it's massive accidents and claims. We're seeing it with auto thefts. We're going to have the highest auto theft number we've ever had in Canada, period, this year, which isn't helping.
No, it's not. Unfortunately, we all pay for that
Yes.
when that's the case. So that's unfortunate that that's going on, and we're paying the price for it for the actions of a handful.
And again, it's all about education. You kind of said it earlier. It's all about educating your clients. I still have a lot of clients that have had insurance for 20, 25 years, and they still don't understand that insurance is a generalized pool of funds. It's not like, yes, you get rated individually based off certain factors, but again, as a whole, like if the stats come in and show, okay, well, David, you live in downtown Hamilton, well, that postal code has 10 more claims than the postal code to the west of you, you're going to have a higher rate than the postal code to the left of you, right? So
Right.
it's just funny that people still don't see that insurance is based that way, which again, there's pros and cons to that. Like I obviously get like people are like, oh, well, what's the point of me not having claims? Well, the point of you not having claims is that your rate doesn't go even higher, right? But I do find claim free is beneficial, but it's not as beneficial it used to be. That's for sure.
Interesting. I didn't realize that. And I guess also the type of vehicle you're driving. If it's a popular car that gets stolen a lot, obviously it's going to be a higher premium for that automobile.
We've also seen, and that's a great point you brought up, is that we've also seen since we talked last, is that a lot of companies have brought in what they call the high theft vehicle surcharge. So basically, if you have a high theft vehicle rated by that company, and you don't have any sort of like tracking device or like anti-theft device in the vehicle, companies actually will surcharge your policy up to $500 more a year because they have such a higher risk of theft.
Interesting. Huh.
And a lot of companies, like it was kind of a domino effect. Like the big companies started it like right at the beginning of the year, and then it was just dominoes after that. Every company basically released a new measure, and we've basically seen majority of companies now have that measure. So it's all going to be company based. Most companies are very similar. So like Honda Civics are based on every list. Dodge Rams are based on every list. Honda CRV is based on every list. So very popular cars like that, you're going to see if you don't have any sort of tracking or anti-theft device in the vehicle, you're going to be paying a higher premium just because, like I said, the companies are just paying out way too much on theft. The last stat that I read is about we're probably going to see about $1.5 billion worth of vehicles stolen in Canada this year. So that's about a $300 million increase from what we had last year, because last year was about 1.2. So
wow.
Again, things are being done about it, but we're still seeing such a high number of vehicles being stolen. So it's like, we still got to get to that point, right? Companies can't, unfortunately, at the end of the day, and people don't like to hear this either, it's just the reality of it. Insurance is a business. If a business isn't profitable, what happens to a business? They either go bankrupt or they get bought out by other companies. And again, that's not beneficial either, because then what happens is that a market gets monopolized, right? You want to have more options than less options, because all that happens is companies get bought up, they go bankrupt, they go to business, and then clients have less options to put their insurance to, right? So that's just the scary part that I'm just really hoping that we don't ever get to. Again, I can't obviously guarantee that, because there's a lot of companies right now that are losing their shirts, we like to say, on a lot of pieces of business. So either they kind of like what they did with snow removal a few years ago, when they basically said no one's touching this in the market anymore because it's so unprofitable, and then they changed laws about it. I just don't see any other way other than, like I said, increasing rates. It sucks for clients like me and you. Obviously, we don't want to pay more for our car insurance, home insurance, business insurance, and that stuff. But like I said, it's a business, right? If you're not profitable, like, they don't exist anymore.
Very true. How has insurance and homes been over the last few years? Is that trending up as well?
100%. And like I said, I tell every client this: you're never really going to see a decrease on homes. You're never going to, because again, real estate is one of those investments that always continues to climb. Like, we might go stagnant for a bit, but we really don't see a dip in real estate, right? So if real estate prices continue to go up, well, what does that do to the rest of the market? Well, that means rebuilding costs are obviously going up, because it's going to cost more to rebuild homes. Well, if it's going to cost more to rebuild homes, that means insurance on homes have to go up, because we're insuring them for a higher value, right? So you can't
Right.
have a higher value of a rebuild, but your rate go down, right? We're also seeing a lot more, like before, we never saw claims on homes unless it was catastrophic, like fire, floods, that kind of stuff. But nowadays we're seeing like everything under the sun. We're seeing, how many times have we seen a windstorm in the last 5 years? Like that's picked up, right? So we're seeing a lot more windstorm claims than we've ever seen before. Water claims continue to be the highest claims on homes in Canada. So we're paying out more on that. People are doing a lot more like theft claims than we've ever seen before, right? So if people actually use their insurance, rates are going to have to go up, right? Because we're paying out more claims than we've ever had to pay out before. So it's just, like I said, it's just educating people at the end of the day. And again, like the biggest thing too is like we've seen a market shift of, yeah, people own homes, but there's so many more people that rent, right? Where before renters insurance 20 years ago wasn't as popular as it is today. And people use renters insurance, right? Like thefts, especially if you're in apartment buildings, like fires, right? Like if someone 3 doors down from you has a fire, I'm going to guarantee you that the smoke or even possibly the flames are going to move into your unit as well, right? If it's not contained fast enough, right? So we are seeing claims at an all-time high and insurance actually being used more. And again, like all that's really going to do is, yes, insurance is there obviously to help people in this time of need, but that also, if people use it, you got to know that rates are going to go up.
No, totally makes sense. I also saw in the news, maybe in the last year or two, that depending where your postal code is for your house, you tend to charge more due to the risk of flooding as well.
Yeah, so that's a great question and great kind of point to bring up is that, again, if you live in more of an area where flooding and sewer backup is obviously more prevalent, again, it's all going to be based off stats of companies, right? Like if company A, let's say in downtown Hamilton, has 50 floods, but company B only has 10 floods, well, company B is obviously going to rate less for those floods because they're not taking on as much flood rate, right?
Right.
So, yeah, like postal code, they do so many stats now based off that. We actually, funny thing is that we actually took on a new company in the last month where they don't rate by postal code. They rate by in-depth stats that they get off basically every factor that they insure. So do I see that being the way of the future? It's going to depend on how they rate it because they're like the first company to market that's doing it this way. So I think if they become successful at doing it this way, I think that a lot of companies will either jump on or try to buy them out to basically take their technology on and use it for themselves. But again, that's gonna only time will tell if this is going to be successful or not, realistically.
Interesting technology to have.
It is, but my thing that I said right off the bat is how expensive is this, and is this going back on clients? So are clients going to have to pay for how expensive it is to gather this kind of stats? So that was my kind of I would almost say like red flag that I brought up was, again, are clients paying for the company to get this kind of stats, or is the company overheading that and hoping to grow enough where they can be profitable by getting these stats, but also charging the right rate for this kind of stuff because they have the stats to do that. Again,
Right.
only time will really tell moving forward.
No, interesting.
But again, like it's interesting. Like, will that be the way of the future? We don't know, right? Like, will auto insurance get to that point? I don't know, right? Because again, auto insurance is very regulated and is rated that way. It's postal code based. Obviously, there's other rating factors, like obviously the vehicle you drive, your licensing, your insurance history, all that kind of stuff too. But again, postal code is a big thing. I know the government of Ontario has been trying to get rid of postal code ratings, but again, I just don't see a way of you doing that, because if you go away from postal code ratings, you do it as a generalized pool, like I like to say. Well, the problem is like, let's say, for example, the Torontos and the Scarboroughs and the Bramptons, yes, they might get a rate decrease, but the people like in Orangeville and like small towns like that. Orangeville is not a small town, but like Fergus, Mount Forest, Binbrook, Dundas, small like little cities like that. You're definitely going to see a lot higher rate because you now have to generalize a whole population of the province instead of doing it by postal code.
Yeah, exactly.
So there's pros and cons to it, just like how the current system, there's pros and cons to the current system as well. Is there ever going to be a perfect system? No. It's just obviously finding a way that companies can still rate properly. But again, like I said, you're going to see rate increases over the next 3 or 5 years. It's the way it is. And like I tell every client, that's the reason why you should be with a good broker, someone that you can trust. Because if we have multiple options for clients, yes, if company A, B, and C go up and company D, F, and G go down, well, then we can kind of move clients around as we need to, right? But if you're with one company that only works with one company, or you're with a broker that only has 2 options, well, but if both those options go up, you're kind of SOL, right?
Yeah, exactly. Options is great for consumers.
Exactly. You don't ever want to monopolize the market, which is, like I said, we look at telecommunications in Canada. You got like 2 companies, maybe 3 if you want to count TELUS, right? Look at internet companies, you got maybe 2 or 3, right? It's just, if you monopolize a market, you're going to see that like prices are not going to reflect options because you really don't have any. You either go to company A or you go to company B. That's been it's been in the news a lot recently with grocery stores, is because we really only have 2 big grocery stores in Canada because 2 companies basically own all the grocery stores. And we're seeing record highs in grocery prices, but also record highs in profits from those companies. So it's like, well, when you have a monopolized market, what do you think happens, right?
Yep, same with airlines too. Basically got two major players.
Yep.
Yep.
So yeah, I just been telling people, like I said, you're going to see rates going up the next 3 to 5 years. I'm transparent about it. I'm not going to sugarcoat it. It is what it is, because at the end of the day, like, clients can call me and be like, yep, you were right, my rate going up again. I'm like, I know I was, because I see the stats every day, right? Like, I just don't see us softening to the point where rates are going to go down. Like, maybe 2025, but again, I'm not going to hold my breath on it.
Yep, it's a fact of life, unfortunately.
But yeah, I know I like to do this with a lot of people that come on. It's a new segment that we kind of do at the end of the podcast. But what's the biggest takeaway you would say from this episode? Like, what's one thing you want to leave with our listeners going to the end of this episode?
Yeah, great. So when it comes to your mortgage, make sure you work with someone that you trust and they're quick to respond and they're, are looking at all options for you. Working with a mortgage agent is always advisable versus going to a standalone financial institution. They can only offer you what's on their menu. So being independent, I work with many different lenders and banks to find the best product that suits you. And, rate's one of them, but there's many other things to keep in mind. So if you're looking for a great product knowledge and great service with lots of options, and give me a shout. I'd be happy to work with you for your mortgage options.
Yeah, and I think I would just piggyback off that and basically say, ask your experts, use them. They're qualified, they're licensed to obviously answer your questions, either if it's insurance, mortgages, real estate, accountants. Use the experts. Again, I know a lot of people go on to social media and they post on community pages and they ask other people, but again, like, are those people actually experts, or are they just speaking from personal terms, right? Like, I get the personal stories are obviously beneficial, but again, like, take those stories and then ask an expert. Be like, hey, you know what? Like, I heard this. Like, is this true? Right? Don't just take them all 100% at truth. Always consult with an expert when you're doing something like I said, insurance, real estate, mortgages, accounting, that kind of stuff. Because at the end of the day, you don't want to make a mistake with one of the biggest purchases you'll make in your life, biggest investment you'll make in your life. And again, from my side, protecting those massive investments. So just always ask an expert when you need to.
Exactly.
But David, thank you for coming on again. Thank you for sharing your wealth of knowledge. Hopefully have you on again in another 12 months and kind of see how the market's kind of shifted from today. Because like I said, from last time to today, there was massive shifts. And again, just making sure people are more educated and obviously hear different opinions from people and just really seeing what's going on in the market. So again, I thank you for taking your time and again, sharing your wealth of knowledge that you have.
Hey, my pleasure. I look forward to coming back on 12 months from now and looking back to what's transpired in the last 2 months. And
yeah, maybe we can say, you know what, some of the things we said were just absolutely absurd.
Yeah, exactly. Time will tell, right?
It's always nice to kind of look back at previous episodes and go, wow, we were so off with that. Or the opposite, be like, wow, we were so on point with that topic, right? It's just only time will really tell with these kind of things. I look back at some episodes and I was like, wow, my opinion on that really sucked. Or my opinion on that actually was like point on, like that was exactly what happened, right? It's so funny where time can really take you, right?
Exactly.
But thank you guys for tuning in this week, and we'll check you guys next time on the Broker Breakdown.